Hello, I'm WSJ Money Beat reporter Paul Vigna. The unemployment rate ticked down to 4.7% in February, but the headline is another strong showing of new jobs added to the economy. 235,000 U.S. payrolls added in February. Joining us to break down the numbers is Wall Street Journal chief economic correspondent Nick Timiraos. Nick, how you doing?
Hey, Paul, good to hear from you.
So this unemployment report, this is the first full month of jobs under the Trump administration. Does it look like things are off to a strong start here, Nick?
Yeah, this is a good piece of hard data. We've seen the soft data, the surveys, the consumer confidence up over the past couple of months. And this is the latest confirmation that President Trump inherited an economy that's really, it's not breaking out, but it's accelerating at a pretty, a pretty good clip. And so there's something for almost everybody to be happy about in this report today. Hiring is up, wages are up, the labor force participation rate is up, and so it was kind of a steady as she goes payrolls report.
Yeah, let's talk about the wages number for a second. It was up 0.2% over January and about 2.8, almost 3% year over year. How do those numbers stack up?
Yeah, it's the best year over year jump in hourly wages that we've seen in the current expansion. And so, if that's one place to look right now for, are we going to see more price pressure? Are we going to see wages up? That was a great number. If it's sustained, I think is maybe the big question right now, because in the past we've seen this number kind of jump up on a year-over-year basis, and then the next month it slides down. Another point that economists are, they're looking at the 235,000 jobs created in February and saying, well, it was a warmer February. We saw a big increase in construction jobs, and you might not normally see that in February because of all the winter weather. So, one question here is how much weather played into this. But I think one of the important takeaways from not just this jobs report, but a lot of the economic data we've seen for the first quarter, the last few years, everybody said, all right, the economy's primed for more growth, and then the first quarter came along and it was kind of a wet blanket. Things didn't go as planned, and that was, kind of messed up everybody's forecast to start the year. Now we're having, a first quarter that looks a little bit better than we've had in the past, and so that's definitely a positive for the outlook for the year ahead.
Yeah, and the next big piece of information the market is going to get will come from the Federal Reserve next week. So we get this report this morning, 235,000 jobs, higher than the numbers that have been coming in the past several months. What does this mean for the Fed?
Well, the Fed, I think, took a lot of the suspense out of this last week. There were, a number of speakers who telegraphed that March was definitely on the table, and this report today does nothing to change that. So they seem to prepare the market for a rate increase in March, and the data came in right where you would want to see it if you were trying to prepare the market for that. So that really doesn't really change the story here, and it'll be interesting now to see. I think the story now is going to shift to, all right, well, are we looking at 2 or 3 or 4 rate increases? Right now the expectation is, kind of around 3, and the debate has been, well, would it be 2 or 3, or would it be 3 or 4? And so if hiring continues in this direction, I think, it's going to change the conversation, put more of the focus around, all right, are we looking at June and maybe 4 rate increases, or is it still likely to be 3? So this is a report that certainly keeps everything kind of where they looked to be heading a week ago when Fed officials were out there saying, that the economy is performing in line with forecasts. Last year at this time, the Fed, had been telegraphing through their projections of 4 rate increases, and of course they only raised rates once last year, and that was because the economy didn't cooperate. So far, at least, the economy is cooperating. So. Everything is on track, as you said, a green light.
All right, a lot more to look forward to. Nick Timiraos, Wall Street Journal Chief Economics Correspondent. Thanks, Nick.
Thank you, Paul.